going on, guys? Welcome back to my channel. For those who are new, my name is Handsome Kelly. I am a full-time day trader. I also coach other individuals how to become 5 and 6 figure traders themselves, as well as how to utilize their credit to build wealth. So if that sounds like you, great. You're gonna love this video. And if that does not sound like you, and you know someone who that does sound like, share this video with them and they're gonna love this video as well. Now for this video, I'll be continuing my Trading Simplified series in which I break down different trading styles so you have a better understanding of how to go about using it and make it more beneficial for your trading journey. For today's episode, I'll be breaking down supply and demand zones. Now, I see a lot of traders, they use supply and demand zones, but they don't really use them correctly. So again, in this video, I'll break them down so you can have a better understanding of them, as well as how to utilize them on a chart so you can help yourself out on your journey. So let's get into it. All right, so for this short lesson, what I want to do, I want to break down exactly what supply and demand is. I want to show you guys how to actually draw supply and demand, and then lastly, I want to show you how to go about trading it to make it easier for your trading journey. Now, for starters, when you think about supply and demand, it's easiest to look at supply and demand from an economic point of view. All right, so an example is this. Let's say that we have the latest Travis Scott, I keep saying it again, the latest Travis Scott sneakers. They come out in 3 weeks, right? So with that being said, they're also limited edition. Now, the fact that they're limited edition, you know that the price is going to be high. Why? Because the supply is very low. So with that, let's say I have the price of 800. That's reasonable. Again, as I just said, it's limited edition. Now, on the flip side, let's say if I have just regular Nike Dunks coming out, in 3 weeks as well. Because it's just like regular Nikes, there's nothing truly special or limited edition about them. I can't charge $800 for that. It's not a limited edition. So for that, the price obviously will decrease. So how you want to go about looking at it as well is that when the supply is too high, the price will fall. When the demand is too high, the price will rise. Pretty much simple as that. So supply in this aspect, when you're drawing it up, your supply will be a resistance area or your resistance zone, and your demand would be your support area or support zone. That's the easiest way to go about what exactly is supply and demand. Now, when it comes to actually drawing up supply and demand, what I like to personally do, I like to look for areas in which price rejected and then price went in the opposite direction, right? So like we're on the daily time frame of EU. Price has been literally a whole downtrend, for months right now. So let's actually go to an uptrend, or let's actually show you guys exactly what I'm looking for, right? So let's say we go to, we do this. I'll start with this one first, right? Let's say we come to this area here. As you guys can clearly see, right, at this point, price is pretty much going sideways until we have a breakout, and then price continues going forward. Now, what you can do is this. This is the breakout candle, right? So what I like to do, I'll do different ones as well to show you guys, but we're going to first start with this one. So what I like to do, I like to go to the wick of the move to the body of the breakout. Now, there's some people who don't use wicks, and I understand that. However, the reason why I include wicks is because on a lower time frame, wicks are candlesticks, and you cannot ignore that. So now let's go to this example right here, right? So we're going to, let me zoom it in for you guys so you guys can see it more clearly. We're going from the wick of the move, which is this. This right here is the wick of the move, and it's the body of the breakout candle. So that right there is the body of the breakout candle. So you have literally, as you guys can see, the wick is right there. So we're going to literally start the wick of the move. And I can do it right there. I just want you guys to see it more. Wick of the move, body of the breakout candle. This right here is the breakout candle. So we're going to go right below it, right there on it. Let me go exactly on it. And then from there, what we're going to do is double tap on this. Your quarters are going to come up. And you're just going to make sure that these are, sorry, these are 4 digits. So 1, 2, 3, 4. Doesn't matter which one it is. Oh, oops. That's actually very, very funny. I did the wrong one. All right, here we go. 1, 2. 1, 2, 3, 4. All right. Click OK. And it goes from where it's at to the future. Right, so now looking at this one right here, as you guys can see, because another thing as well, that's just drawing it up. But what you want to pay attention to is you want to look for areas in which price was rejected. So as you guys can clearly see, this was in, what is this? This is May of 2020. This right here reacted to it the first time in March of 2022, as you guys can clearly see, right? From that one zone, price came to it, rejected from that. Price came to it, rejected again. We finally needed a candle to break out of that, which we clearly did. Price came into it one more time, rejection from that, another rejection, then price continued just dropping down from there. And then from there, did we keep? No, that was a wrap from that. So that's literally the easiest way to go about it, guys. You want to go from the wick of the move to a body of the breakout candle. And again, you don't want to do just any one. You want to do an area which price literally after that, price didn't come back down, it just continued going up. So we can also do a few ones after, right? So even with this one, price at this point, price is also starting to go into an uptrend. So you guys can see we came to a high, price came back down, right? Gave us a lower, gave us a higher low. So from this point as well, you want to see in which price literally with, with the move by the breakout candle. So from this one right here, this is not the breakout candle because price is not really jumping up yet. So pretty much I would say more aligned with this one. So you can do the wick of this move right here. So you can do the wick of this move, buy to the breakout candle, which is right there. As you guys can see, I'm going to do it exactly on here where the wick is at. That's the buy to the breakout. Double tap on this. Let's just do 1, 2, 3, 4. Click OK. And let's see how price reacted to this one right here. So same exact thing. So we do a little consolidation within this zone. After that, we finally get a breakout. Price came into it one time, rejection, another breakout, retest of that zone, and then that's it. That's all she wrote. And I'm going to do a few more as well. I'll do one more, just so you guys can get a better idea of it, right? So let's say we did this one. Even this one right here, we're going to move, buy into breakout candle. Breakout candle is right there. I'm going to go more on this side. Go literally to the future, 1, 2, 3, 4, click OK. And you can see, even on this as well, how price is playing out with that. Like with this zone, we literally came up. We're just in that zone. We broke out of that, had another retest, and then prices dropped. So that right there, guys, very fast lesson, but this is how you go about drawing up supply and supply and demand zones and how you go about trading it. Now for myself, and you guys understand this as well, everything boils down to market structure, support resistance, and candlestick analysis. So supply and demand zone is another way of utilizing support resistance, or another way of saying support resistance. Obviously, we have more touches to an actual zone, the weaker the zone becomes, and that's the easiest way how you want to go about it as well. So just like a resistance or support. If you have demand or you have price coming to one of your supply and demand zones, that's a support. That right there alone is what would you do? You would buy from that zone until it actually breaks. Same thing with a resistance zone. You would sell at that resistance until it breaks. So just keeping it simple across the board, you buy at support, you sell at resistance until something tells you otherwise. There's no difference with zones. You buy at a zone, you sell at a zone, either one, until something tells you otherwise. So guys, once you have this understandable, once you have this more clarified and better understand how to go about utilizing it, because it's very beneficial when it comes to your trading. You don't want to make this your only thing, but just remember, guys, don't just draw it one time. Draw it a few times. That way you have repetition, and repetition is the mother of all skills. So when you draw it up over and over, you'll get a better idea of how to go about utilizing it, as well as how to go about drawing it correctly.